Ethereum has been tearing it up lately. Ethereum, along with Bitcoin, are your OG cryptocurrencies, and they set the tone for the sentiment across the entire crypto space. As long as Bitcoin and Ethereum look healthy, I tend to be very optimistic about the rest of the crypto sector. In our last update, we were completing what I was calling a small wave 2 pullback, and it was pretty drastic. We hit almost the 61.8% retrace of our initial 5-wave rally, what I'm calling the subwave 1 here, and we bottomed around 26.55. Ever since then, we've rallied powerfully, almost continuously. There haven't been too many strong pullbacks within this rally structure. We peaked at about 46.68 not that long ago, and we're still hovering near that peak. We have rallied so strongly that we've actually gotten through our first real test of resistance, which is typically your 0.618 and your 0.764 extensions of your larger 1-2. So those set at 4077 and 4413, and we got through both. In Elliott Wave Fibonacci Pinball, you want to get through both of those resistances, and you want any subsequent pullbacks to hold above the 0.618 extension of 4077. And so far we're doing. If this pattern is indeed the motive pattern, our subwave 3 should take us somewhere in this box, which is just north of 5,000, somewhere between 5,000, 5,500, right in that range. Expect a fourth wave. So don't be surprised if we have a bit more of a rally to complete this structure and then we pull back somewhat. We shouldn't break below 4,077. As I mentioned before, that is our key test resistance. It doesn't mean that the pattern is in trouble, but holding that resistance is a very good sign that our rally is legit and it's going to be following our standard Fibonacci pinball extensions. If we do break through that, I do have a support set at 34.15 right now, and this is just based on a 61.8% retrace of what we have so far here, but I do not see us pulling back down there at this moment. If you are looking to buy, well, our window to buy lump sums has more or less closed. I wouldn't feel confident buying large amounts of Ethereum at this moment, or many other cryptocurrencies for that matter. So from here onwards, dollar cost averaging is going to be your way to go. That is the best way to invest in cryptos anyway, but especially in a strong rally. As the price climbs, the risk rises as well. So you want to be able to space out your buys, not only to reduce the emotional attachment, but also make sure you don't buy any peaks inadvertently. Our big picture in Ethereum is actually even more exciting. We can clearly see some very clean rally structures in place. Our peak earlier this year in May was what I was calling a wave 3, and then we had a subsequent wave 4, and our rally that we've had that we're just looking at on the small term picture is right here. You have a 1-2 structure, and of course this is a logarithmic chart, so our extensions project a bit differently from the linear chart. If we can hold our pattern, which is doing very well right now, you see this strong rally. Our subwave 3 is targeting between 8661 and 10,601. These are just standard wave 3 targets based on this 1-2 that we have in place at the moment. Now you'll notice in the MACD that we are overbought, but when you have record-breaking rallies that get you into all-time highs every few days, you tend to stay overbought for the entire length of the rally. In the future, once we do get those bigger targets, these are not even going to be visible. In that subwave 3, I do have some channel trend lines drawn here, so that gives us a bit more of an idea on timing. And right now, I have an estimate around January 7th all the way into February. So I know I mentioned that there's a possibility we could actually outrun the trend line and possibly see these highs by December. Right now, the trend lines as drawn are looking at a January to February timeline to get to the subwave 3. The subwave 4 that will follow, I would expect to be relatively lengthy, while second waves are typically quick and sharp and come in a zigzag pattern. Fourth waves tend to go very sideways. You'll often see triangles or flats, those kinds of things. And I'm just going to do an estimate here. Our second wave started on September 6th and it ended somewhere around end of September. So we'll call it just short of a month, maybe 4 weeks. Our subwave 4 could easily be double that. So imagine this thing being a 2-month-long consolidation. That would not surprise me at all. And the way I have it drawn, it could be Q2 by the time we're done with the fourth wave. The good thing is that'll give you one more chance to buy before the final fifth wave takes us all the way up to 12,000 to 14,705. Those are our standard targets. And the timing on that is, of course, still to be determined based on how we rally. But if we had to give a preliminary estimate, sometime in Q2 is what we're looking at based on the extensions we have so far. Now, even if we do outrun our trend line and our subwave 3 top comes earlier, remember fourth waves are slow, so that may not bring our fifth wave any closer in time. Now, the exciting thing here is that these are standard extensions. However, as I've mentioned many times in my other crypto videos, as well as my commodities videos, we often see fifth wave extensions or blow off tops in cryptos and commodities. And Ethereum has a history of doing this. If we look at the structure of our impulsive rallies so far, you'll see these fifth wave blow-offs that take off like crazy after a bit of a delay. And we saw that actually happen in the spring as well. We had just this relentless rally to finish off the subwave 3. That is, of course, the lower degree fifth wave of this larger third wave. In addition, when we look at our short-term chart again, this is the 2-hour view we looked at earlier, you'll see that based on the fact that this is our 1-2 down here, our eventual wave 5 actually struck the 2.618 target almost perfectly. So that's a heck of an extension if we're going to see anything like that. So for that reason, we could blow through 14,705. We could actually get up as high as 18,970, at which there is a strong confluence. Usually in Elliott waves, you have another common relationship in which if you take the length of the entire third wave and then you look at the fourth wave and you take an extension off of that, we commonly see fifth wave targets hitting between 0.382, 0.5, or the 0.618 extension. That gives us a very strong likelihood that we could blast all the way into the $18,000, $19,000 range. If we look at this smaller extension out here again, based on the 1-2, our 2.618 target takes us well over $20,000. So like I said, there's a lot of excitement here. In addition, as I alluded to earlier, Bitcoin and Ethereum set the tone for everything else. I've been hinting that some of our altcoins have been lagging a lot. Some of them have a tendency to procrastinate. They put off all their rallying until the very end. This kind of movement in Ethereum could actually support that perspective that we may see late rallies in altcoins. What happens at that top? Well, I would strongly suggest, especially in Bitcoin and Ethereum, to get out of your cryptos. I expect a major crash. You'll see how I have this labeled as the fifth wave of a fifth wave of a fifth wave of a larger impulse. So this is the top of the cycle that began many years ago. I'm talking about the mid-2010, since Ethereum has been around for the most part. So this is a major cycle top. And our wave 2 after that should be quite devastating. Wave 2s typically retrace 38.2 to 61.8% of the preceding wave 1. But this is a logarithmic chart. So you might see this thing drop from the mid-teens range, from the $15,000 to $20,000 range, all the way down to $1,500, maybe even below $1,000. And we've seen this before. This is not unprecedented in cryptos. So that would be a great time to divest yourself out of Ethereum, possibly cryptos in general, maybe reinvest into other asset classes or even stable coins to protect yourself. Now, the length of this bear market is very hard to predict at this moment. If history is any indication, this could be a multi-year bear market in crypto. It could be the point at which everyone leaves cryptos for dead. You got your old timers coming out of the woodwork telling you that young whippersnappers don't understand investing. Crypto's a newfangled thing that was doomed to fail. But we've seen this before. It crashes and it comes back stronger than ever. So the silver lining here is that you're going to have a big chance to load up over the next few years of the bear market after this point. And more importantly, I don't expect our altcoins to crash as hard as Bitcoin or Ethereum. We may see those completing their own larger patterns and give us outstanding returns during this bear market. You never know. These cryptos generally move together, but sometimes you'll see some divergence, or maybe you see a B wave bounce in Bitcoin and Ethereum while some of the altcoins hit their all-time highs. It's going to be an exciting time over the next few years in crypto. So if you enjoyed my video, please like. If you would like to keep getting updates on Ethereum, as well as various cryptocurrencies and education on Elliott waves, don't forget to subscribe. Until next time, thank you for watching and happy trading.